So I wanted to focus just to begin with on your expansion plans, because of course you are here in Dubai where you're planning to open some sites. Walk us through the thinking there and also what you have brewing in Saudi Arabia where you just got a license.
Yes, so I think firstly the results kind of indicate that we've kind of set that platform and the foundation. We have seen a good performance. We've seen 25% EBITDA growth, over 12% growth in the net profit as well. But I think the most important thing for the first quarter results for me has been, on top of that, has been our focus on our priorities and strategies. We talk about our growth, the growth in our business. In the convenience stores, we've seen over 30% gross margin growth year on year. Right. In our expansion plans, we announced we would move into Dubai, as you say, and we're on track to open our 3 sites in Dubai this year, which is ahead of plan. And actually, we've just, as you said, got a license in Saudi Arabia as well. So looking at the first quarter results, a positive set of financial results, but a positive strategic.
John, I mean, wait this out for us. So you're saying you're pushing on into Saudi Arabia, you're pushing on into Dubai. Which one is going to be more of a priority for you, and how aggressively are you going to go into Dubai over the next few years, given that it is already a saturated market?
So it's certainly a market where you have strong competition, and actually we want to bring an added value to that, to the consumers and to the customers. We have strong players in Dubai today. We've talked about 3 to 5 sites per year in Dubai. That is our plan, and that continues to be our plan. But we want to make sure with that we bring the strong convenience retail, the strong customer choices to Dubai as well. I think what's clear in Dubai is that there is space for new players, new sites. We know there are queues in Dubai market today. We know the market has space, but we will do that in a progressive but gradual way.
From an investor point of view, John, good to see you. Welcome to the show.
Thank you.
From an investor point of view, you IPO'd at the start of the year. There's been a slight underperformance relative to the IPO price. Dividends are critical, and we have seen this play out in a number of different stocks in the region. What guidance can you give us on dividends for the rest of this year, going into 2019, in terms of dollars, a dollar amount?
So I think the board have been very clear in terms of how progressive they wanted to be. We've said for the first year we would pay $400 million. If you look at our results, we're well on track for that. And then, I think we have also been really clear as a board, and the board has yet to kind of ratify all of this. But, I think to be really progressive in its dividend. Our cash for Q1 has been strong. Not only have we delivered on the EBITDA, but we've also taken significant cash out of our CapEx because of efficiency and effectiveness. So we've seen a $60 million projected upside on our CapEx. So I think from a cash perspective, which obviously leads into a dividend policy, we're in a strong place.
Manus brings up a good point, as he so often does, about the share price performance, which is that it has drifted below the initial IPO offer price. Is there anything you can do to lift that up away from the dividend, maybe raising the liquidity, raising the free float, for instance?
So I think firstly, when I look at the share price and I compare it across the globe in terms of retail piece, I think we're doing very well. And I think we're well within the range. And if you consider where we started at 250, we actually paid a dividend, and the dividend's already come out of that. So I think, share price and it really depends on performance.
What about selling more shares, though? Because initially you set up to 30% as a stake.
Yeah. So Adnoc owned, the 90%. I think Adnoc have to make that decision. I think for Adnoc Distribution, our focus is, can we deliver? I think Q1 tells us, yes, we can do that. We're delivering ahead of our expectations, and strategically and financially. I think from an investor perspective, that's what I'm focused on, making sure we deliver on our promises.
What are you seeing in terms of demand? I mean, what is confidence like among consumers? I mean, with the rebound in oil prices that we're seeing, is that trickling through yet? Are you seeing some evidence that things are picking up?
So volumes are up about 1% year on year. So it's pretty flat market at the moment. But I think when I see the investments that Adnoc just announced this year, 45 billion into Abu Dhabi, I'm very, very excited and really believe the UAE fundamentals are very strong and will give us growth in the medium to short term.
We get the bullish picture. One thing which fascinates me, if I hear one more person complain about a 5% VAT level, I really will cry for them on their behalf. But it is a new paradigm, and to that end, you are running in part a retail business. You are seeing what happens at the front end of the queue. Have you seen any material change in the average spend at the pump in the first 6 months of this year. Have you seen a material impact of VAT?
We've not seen a material impact in VAT. And if you actually look at the convenience stores where you would expect to see it more,
yes,
our convenience gross margin is up over 30%. The average basket size is up about 12.5%.
Is that with the next growth piece then, an adjunct to complement the growth strategy?
It's a very much fundamental part of it, actually, because we've said all along, you know, we have a strong position in fuel. Our non-fuel business has been the weaker part of our business, and it's growing that and putting in investment. We've just opened a partnership with Giant in the region, actually, where we actually give our consumers much greater choice. So we're seeing that. So I really think whether it's VAT or etc., if you give the consumer what they're looking for, you will do well as a business.
John, you mentioned the magic word, partnership. Just going back to the Saudi expansion, I can't imagine that you're planning on going it alone in a market that is as saturated as that. So does that mean that you're looking for potential partners?
Absolutely. I think if you go into any market, you have to go in with confidence but with humility. You need to understand that market. And that is our focus at the moment. Working with partners, working and talking to people in Saudi to come in to support the Saudi market, not to be a competition for it, as we're doing in Dubai.